We've got with us the Managing Director, Manimekhalai of Union Bank, the CEO as well, joining in to talk a little bit about their quarterly performance as well as outlook on deposit growth and return ratios. Good to have you on board. Thanks so much for joining in. To begin with, you've reported the highest ever net profit in around 30 quarters. What has really contributed to this?
Before I get into the profitability part of it, let me just briefly tell you on what we have achieved during the quarter and for the year as a whole. We have given a year-on-year growth in deposits to the tune of about 8.26% and credit growth at 13.05%. Consistently, we have been growing in these two areas. RAM has performed very well, 14.94% in the RAM sector. We have done profits to the tune of about 25,467 crores. That is what we have done. Our increase in profitability, that is net profit, is to the tune of almost 61.86%. If you remember, we had given ourselves two guidance in the beginning of the year that we will cross 19 trillion of businesses and at least 15% growth in our operating profit. And these two focus areas was there for us from the beginning of the year, and that is what has led to the healthy growth in the net interest income and in the fee-based income. If you look at my net interest income, it has grown by almost 21.2%, and even in my fee-based income, we have seen substantial growth. Fee-based income meaning out of my own books, like your third party, and we have a wonderful product for the CMS, that is the cash and the payment systems, where we have got a wonderful product, and through that we were being able to register a growth of almost 23%. Plus, the third most important part for us was, from the return of accounts or our asset quality, where we were able to recover substantially during the quarter from our NPA books, and we were able to recover quite a substantial number, almost like 5,500 crores we have recovered from our return of numbers, and during the quarter itself we did about 2,300 crores in our return of numbers, and that's the reason that we could show a very healthy growth. It is not just one parameter that we have been focusing during the whole year. We have been taking various measures to see that whatever we do, we are able to register good growth in all those numbers. Thank you.
Do you believe the advances growth rate will slow down from the current pace of 13%?
We had given it, ourselves a guidance in the last year to about 12 to 14%, and then we have achieved our 13.05% of growth in the last year. And during the current year, we are hoping to have an advances growth of 10 to 12%. And this is what the analysts have predicted, that this year the growth will be to the extent of 12 to 13%. And in keeping with the market and the systems, we are hoping that we will also grow at 10 to 12%. To give you a small perspective, as on date, I still have about 35,000 of sanctions with me, and this will help me to generate further income. You have also seen that during the year we have created a lot of verticals. We will look at the mid-corporate segment or the retail loan segment and the MSME loan points. We have created LCBs, 14 of them. We have also created something called the CRC, the corporate relationship cells, during the year. And all these various verticals that we have created will propel us to achieve the targets that have been set up for the bank.
Do you believe that the stress with respect to asset quality is likely to rise further in next financial year?
Stress would be there. This is a normal course of business, and the economy also. So stress would be there in various parameters, and we have seen the interest rate hike also substantially in the last 2 years, and this is also added to the stress. But I am sure that we will be able to manage the stress substantially. This year, the stress SMA 0, 1 and 2 books were limited to 0.62% of my total book, but I'm sure that for the current year also I will be able to give that kind of a guidance to ourselves. If you look at what we have done is most of our stress is looked at very seriously by the bank. We have got a 5-pronged approach, right from the bank calling up the stressed borrower as soon before even the accounts goes into the SMA 0 position. The SMS goes to the customer. There is a call that goes from the branch. There's an RCOC, the regional call center calls him. There is a foot on street where the customer are visited by our people or through my subsidiary. And the last but not the least, the call centers also help us in recovery. So with this five-pronged approach that the bank has taken, I'm sure the stress will be maintained, and I'm sure that we will be able to maintain at the same level at what we are having it at this year.
Right. So you've said that your NIMs will be maintained at 3%. Will you be able to maintain margins in high interest rate scenario, you think?
If you look at my book of 8.10 lakh loan book, out of that almost 50% of my loan book is covered by an MCLR, and so this is to be repriced once in a year. So out of that, just about 50% of them have been repriced during the current year, and going forward the remaining 50%, if you look at even in as of September alone, I've got about 41 to 50,000 crores of my loan book to be repriced during the year. So I'm not seeing any reduction in my margins. Plus the deposits rates have also come down. What we have observed in March, about 40 to 50 bips has come down in the interest rate after the pause taken by the Reserve Bank of India. So we are hoping that the NIM will be at the same level. We are hoping to maintain the NIM at the 3% level.
Lastly, what's your guidance on ROA, ROE in the financial year, and by when do you think you're going to move towards an ROA of 1%?
Yeah, return on assets, we are hoping to, at least 25 is what we have given the date that it will be at 1. In the current financial, for the quarter, we were at 0.88, and for the year as a whole, we were at 0.69. We are just hoping that we will reach 0.75 at least at the end of the fiscal.
All right. Thanks much for taking time out and joining in and giving us a view. That's the word coming in from the management of Union Bank, talking about a 10 to 12% advances growth and saying that they will maintain their credit costs. That's Union Bank at about 75 rupees.